Welcome to Talk Tickers. Today, we are digging into the latest quarterly earnings report from the PC gaming and hardware giant Corsair.
So Corsair's latest quarter, it's a bit of a head-scratcher. On one hand, you've got this massive 23% revenue beat. Awesome, right? But then they missed on earnings. So what's the real story here? Is this a win, or is there something to worry about? Let's get into it.
Okay, so first things first, let's break down those headline numbers that really got the market buzzing. And what a beat it was. We're talking a huge 23% jump in sales compared to last year. I mean, that absolutely smashed what analysts were expecting. It points to some seriously strong demand for their products.
But here's the other side of that coin. Earnings per share, or EPS, actually missed the mark. The street was looking for 3 cents, but Corsair only delivered a penny. And that, of course, immediately makes you ask, what's going on with their profitability?
So how do you reconcile those two things? A big revenue beat, but an earnings miss? Well, a key piece of this puzzle is looking at the gross margin. And what's interesting is that it actually expanded by 270 basis points. That's 2.7%, which, usually suggests they're selling the right stuff and running their operations more efficiently.
Okay, so let's put it all together. You've got that awesome revenue beat, the little stumble on earnings, but there's one more really important piece here. Management came out and reaffirmed their full-year revenue guidance. To me, that signals they're pretty confident this sales momentum isn't just a flash in the pan.
So let's dig a little deeper. Where did that massive 23% growth actually come from? You got to look at which parts of the business were really firing on all cylinders.
And wow, was it clear. The engine driving this whole thing was their gaming components and systems segment. It was just on fire, growing by an incredible 30%. We're talking about the real guts of a gaming PC. Your power supplies, your cooling systems, your memory. Now, peripherals did fine. They grew too, but man, it was the components that were the real heroes this quarter.
So if you drill down even further, management pointed to a few key things. The number one driver, all the hype around the new GPUs from Nvidia and AMD. You know how it is, when a gamer drops serious cash on a new graphics card, they often end up upgrading a bunch of other stuff too. And that is Corsair's absolute sweet spot. On top of that, their Elgato brand is still killing it in the creator space, and the new sim racing gear from their Fanatec acquisition got off to a really solid start.
And you can see the strategy right there in the CEO's own words. He's talking about this multi-stage refresh cycle. Basically, he's telling us, hey, this isn't just a one-off good quarter. We see this as a long-term trend, a tailwind that's going to keep pushing our business forward.
All right, so let's zoom out a bit and look at the bigger picture for Corsair.
And it's really important to remember, investors have been waiting for this story to play out. I mean, look at the stock over the past year. It's up a staggering 53%. That absolutely crushes the S&P 500. So this tells you the market has been betting on this big PC upgrade cycle for a while now.
Behind the scenes, management was also doing some really smart financial housekeeping. They paid down another $24 million in debt and refinanced their credit. Now, why should you care about that? Well, it's a big deal. It makes their balance sheet healthier, it lowers risk, and it gives them way more flexibility to load up on inventory and launch new products to really ride this wave.
Okay, so looking ahead, what should we be watching for? Here are the key things to keep on your radar. Number one, the holiday season. It's always huge. Number two, and this is a big one, is what happens with those semiconductor tariffs. Management basically said this is a major question mark. 3, can Fanatec keep up its momentum and really gain some traction? And finally, keep an eye out for new product launches, especially if they make a bigger push into AI workstations.
All right, that brings us to the final call, our rating and outlook. So, after all that, what's the bottom line?
I mean, think about it. The stock's already had this huge 50+% run, and the quarter, while strong on the top line, wasn't perfect. So this is the big question, right? Where does the stock go from here?
When we put all the pieces together, we're calling this one market perform.
So here's our thinking. The positives are really obvious. You've got incredible revenue momentum thanks to the GPU cycle, and they're executing really well. But you can't just ignore the risks. That EPS miss is a red flag. And the whole tariff situation really clouds up the outlook for their profits. So, for us, it boils down to this. The risk and reward feel pretty balanced right now. We need to see more clarity on whether these margins can hold up before getting more bullish.
So, the big question heading into the next quarter is simple. Can Corsair turn all this amazing sales growth into consistent, reliable profits? That's what we'll be watching. And of course, a quick reminder, this is not financial advice.